I'm Natalie MacDonald, bringing you today's Week Ahead interview, where we invite a market insider to discuss the economic news and data releases which could help shape currency markets over this trading week. On the phone with me now is Georgette Boele from ABN AMRO. Georgette, what, in your opinion, will be the big market-moving event of this week?
If you look back to, for example, the last weeks have happened, is in fact that the market has been very sensitive towards possible changes in monetary policy across the Atlantic. The ECB, which we had last week, the comments were quite well translated as somewhat a little bit hawkish. A few weeks before it was the Fed, which in fact gave uncertainty that maybe the asset purchase will continue to the end of the week. So if we look for this week, we continue to believe that will be a market moving developments are from that direction. We have quite important speakers for this week from the Fed, including the Governor Bernanke today, and the market will want to look for, okay, if the comments they make, are they pointing in the direction that the asset purchases will continue for the whole year, or if that's not the case. And this is one of the things what can push the dollar up or down, in fact. Another thing is U.S. data will be very important. We have retail sales, other economic data like industrial production, CPI. And the thing is that last week we have already seen that market participants have adjusted their expectations on the U.S. economy somewhat, and if data come in weaker as well this week, we can expect it. That could continue this week as well. That means that the dollar could face a bit of headwinds this week. If these data don't point in that direction at all, you could see some of a correction, because if you look euro versus dollar, for example, the move went up pretty quickly, and some kind of profit taking in euro versus dollar could be possible, but we need a bit of better US data for that, or Fed speakers not sounding too dovish.
This week it's the turn of CPI data, with the UK on Tuesday, Europe and the US on Wednesday. Economists are expecting European data to show signs of re-emerging inflation, while the UK and US are anticipated to remain flat. With rate decisions last week also stagnated, how does this lack of movement fare on the currency markets?
The CPI, of course, CPI has been at times very, very important, but what is important as well is that the central banks are also focusing on inflationary developments now. The central banks recently have been more focusing on growth and how to support growth. For example, also in the U.S., of course, it's like if as soon as growth is going in the right direction, inflationary numbers become more important for currency markets. So on the U.S. side, to be very honest, I don't expect a big movement after U.S. CPI release, unless it's much higher than expected. But this is not what we expect, to be very honest. So if there isn't surprise, then it should be probably a bit higher dollar if CPI comes in a bit higher in the U.S. But to be very honest, it will not have a huge impact at this current stage of the monetary policy. In the UK, the fact that the Bank of England would done some kind of more asset purchasing is already priced out, also because of the developments on the inflationary front. So also here, even if inflation comes in a bit higher, this will not have a huge market impact, we expect. Also, if you look at the sterling market, especially euro sterling, it has been more moving by an improvement in also overall euro sentiment than the data in the UK. So euro sterling is more driven on the euro than on the sterling side. So also going forward, CPI is an important data, but we don't expect much fireworks in currency markets because of this release.
Wednesday also sees the release of the ECB's monthly report. With a unanimous decision last week to keep rates unchanged, can we expect anything new from this report?
No, I think if you look at the ECB and ECB monthly, I think the big firework was more last week in adjustment of the expectations on the ECB, not that they left interest rates unchanged, but more that the overall comments in the question and answers, the market translated as a touch more hawkish. But we don't expect the monthly to have a market moving impact. No, to be very honest, no, we don't see this driving currency market this week.
And lastly, China's fourth quarter GDP data is out at 2 a.m. GMT on Friday. The country's GDP is expected to rise to 8% in 2013. There have been some queries regarding these estimates following analyst comments last week that China's positive November trade data didn't match. Is such speculation fair?
I would not make an adjustment on the speculation. It's more that if there is some speculation like this in the market, they will be a bit more cautious looking forward to the release of the data coming out, for example, this week. So even though if, for example, the data come in more stronger than expected, the market's reaction will probably not as strong as it otherwise would be if they not have questioned the earlier data. So overall, if the GDP is better than expected, then we expect commodity currencies like Aussie, New Zealand, also to a lesser extent Canada, to receive some support, but probably less than if there were no questions about the trade data last week.
Thank you, Georgette. I'll be back tomorrow with this week's First Commodities Corner interview. Until then, goodbye.